On June 18, 2024, the closing date, Atlantic International Corp., Atlantic or the company, formerly known as SEC LL Inc., completed the acquisition, the merger, of Linear Investments LLC and its operating subsidiaries, including Linear Staffing Solutions LLC, collectively Linear. On January 23, 2026, the company completed the acquisition, Circle 8 closing date, or the Circle 8 acquisition of Circle 8 Group BV Circle 8. In the United States of America, USA, the company specializes in the placement of temporary and temporary to permanent labor across various industries. The company primarily places individuals in accounting and finance, administrative and clerical, information technology, legal, light industrial, and medical roles. The company is also a leading provider of productivity consulting and workforce management solutions. The company has more than 100 locations throughout the USA. In Europe, the company specializes in workforce solutions to enterprises, technology companies, financial institutions, and public sector organizations. Circle 8 focuses on sourcing, deploying, and managing highly skilled professionals in information technology and related digital disciplines. Circle 8 is one of the fastest growing IT and technology staffing companies, operating across Europe through a portfolio of specialized brands. Circle 8 manages approximately 8,500 technology professionals and specializes in software development, data analytics, cybersecurity, project management, and emerging technologies. On June 18, 2024, the closing date, Atlantic International Corp., Atlantic or the company, formerly known as SEC LL Inc., completed the acquisition, the merger of Linear. The consideration for the acquisition was the issuance to IDC, the then current owner of Linear, a convertible promissory note in the principal amount of $35 million that was originally due on or before September 30, 2024, which has been extended to March 31, 2027. See Note 8, Debt for further information. And B, 25,423,729 shares of the company's common stock at a market value of $2.36 per share, or $60 million in the aggregate. The stockholders of Atlantic Acquisition Corp. Were issued an aggregate of 18,220,338 shares of company's common stock at a market value of $2.36 per share, or $43 in the aggregate, the Atlantic consideration. In the event of default, IDC shall be issued $10 million of additional shares of Atlantic common stock, valued at the then current price of ATLN common stock. The company is currently not in default of the convertible promissory note. On January 23, 2026, the company completed the Circle 8 acquisition. Circle 8 is a company organized under the laws of the Netherlands. The Circle 8 acquisition was consummated pursuant to the terms of the acquisition agreement, dated January 26, 2026. The acquisition agreement, by and among the company, Axiom or the Circle 8 seller, and Circle 8. The company is pursuing a strategy of building a global staffing organization through strategic acquisitions. Through the acquisition of Circle 8, Atlantic has extended its capabilities into specialized high-growth information technology and other technological staffing capabilities across Europe, complementing the company's North American industrial staffing operations. On the Circle 8 closing date, the company acquired 100% of the outstanding voting equity of Circle 8. However, upon the closing of the Circle 8 acquisition, a third party retained a non-controlling 20% equity interest, redeemable NCI in Circle 8 Consulting GmbH, Circle 8 Consulting. The provisional aggregate fair value of purchase consideration transferred for Circle 8 amounted to $278,148,048 on the Circle 8 closing date and consisted of the following: 12,516,070 shares of the company's common stock, par value $0.00001 per share, common stock, with an aggregate fair value of $48,312,030 issued to the Circle 8 seller, the initial equity consideration. The company entered into an obligation to issue 4 million shares of the company's common stock with an aggregate fair value of $15,440,000 on the Circle 8 acquisition date to settle a liability for transaction expenses incurred by Circle 8, the advisor equity payment. A convertible promissory note, the convertible note, payable to the Circle 8 seller with a provisional fair value of $205,706,132. A contingent consideration arrangement, pursuant to which the company is obligated to pay the Circle 8 seller a fixed amount totaling $2,500,000 if Circle 8 revenue equals or exceeds 600 million euros, the equivalent of approximately 693 million at March 31st, 2026. During the calendar year ended December 31st, 2026, the Circle 8 contingent consideration. In exchange for the Circle 8 business, the company has agreed to make an additional payment if greater than $2 to the Circle 8 seller equal to the net profit of Circle 8 as set forth on the Circle 8 financial statements for the year ended December 31st, 2025, less any post-acquisition cash payments made to Circle 8 in calendar year 2026 by Atlantic to support Circle 8's operations, the profit payment amount. The company is obligated to issue additional shares of common stock to Axiom in the event there is a conversion of the merger note issued to IDC on June 18, 2024, share-settled earnout. The company's trademarks relate to 7 Stars, Fixed Today, and Swiss Links brands, and the trade name relates to Circle 8, which it uses in various geographic locations. Revenue and net loss of Circle 8 included in the accompanying condensed consolidated statement of operations and comprehensive loss for the period from January 23, 2026 through March 31, 2026 amounted to $145,248,041 and $5,008,996 respectively. In connection with the Circle 8 acquisition, the company and Gus Franke entered into an employment and board service agreement, the Franke Agreement, which has provisionally been accounted for separately from the Circle 8 acquisition. Axiom and an affiliated entity, Axiom Partners BV, Axiom Netherlands, each entered into separate consulting agreements with Circle 8 on January 20, 2026. Atlantic has concluded that there is substantial doubt about its ability to continue as a going concern for at least 1 year from the date of issuance of its unaudited condensed consolidated financial statements. The company expects that the acquisition of Circle 8 will enhance its scale, liquidity, and access to capital, positioning the combined entity for potential premium valuation multiples and expanded international reach with established global clients. On April 29, 2025, the company closed on a new revolving credit facility with a maturity date of April 29, 2028. Lanier and IDC entered into a debt allocation agreement, the allocation agreement, dated as of December 31, 2023, which specifies and allocates responsibility for repaying or refinancing the joint and several debts between Lanier and IDC. On April 29, 2025, the company's subsidiary, Lanier Staffing Solutions, LLC, Lanier entered into a loan and security agreement, the loan agreement, with North Mill Capital, LLC, DBA SLR Business Credit, SLR, providing for a $70 million advanced limit, senior secured revolving credit facility, the revolver. On August 31, 2021, the company and IDC as co-borrowers entered into a term note in the amount of $30,300,000. On April 28, 2025, the term note lender foreclosed on IDC's remaining 21,983,926 shares of Atlantic International Corp common stock, IDC shares, after taking into consideration the shares assumed by BMO discussed above. As part of the purchase price consideration for the transaction, the company and IDC as co-borrowers issued various seller notes to former owners totaling $15,750,000. During 2023, the company and IDC as co-borrowers issued 9 notes payable with an aggregate value of $13,494,133. On January 16, 2024, the company and IDC as co-borrowers issued 6 notes payable with an aggregate value of $6,999,000 $941,521. On June 18, 2024, the company entered into a secured bridge loan credit agreement in the principal amount of $1,950,000 at an interest rate of 5% per annum. On January 23, 2026, the company and Saint Laurent entered into a confidential settlement agreement pursuant to which the entire $1,375,000 principal amount of the notes were paid in full on January 29, 2026. In connection with the closing of the merger, we issued to IDC the merger note in the principal amount of $35 million, with an original maturity date of September 30, 2024. On January 23, 2026, in connection with the Circle 8 acquisition, the company issued a convertible note to Axiom as a component of consideration transferred for the business. The convertible note has a stated principal amount of $161,961,751 and is non-interest bearing. In connection with the Circle 8 acquisition, the company assumed a receivables purchase agreement between Circle 8 and Argentum Securities Ireland plc, Argentum, which permits Circle 8 to sell eligible billed and unbilled receivables to Argentum for cash proceeds in certain circumstances. In February 2023, Circle 8 entered into a loan agreement with Luzerner Cantonal Bank AG as lender for a credit facility of up to 29 million francs, approximately $36,285,000 as of March 31, 2026, to partially finance the acquisition of 100% of the shares in Swiss Links AG and Swiss Links International Limited. On October 26, 2022, Circle 8 entered into a credit agreement with Beachbrook Capital, LLP, to partially fund the acquisition of all outstanding shares in the capital of Seven Stars Holding BV and each of its subsidiaries. On April 26, 2023, Circle 8 entered into a loan agreement with Sparkasse Köln's Bonn to finance a portion of the purchase price payable under a share purchase agreement for the acquisition of 80% of the shares outstanding in Königstein Beratungsgesellschaft für EDV Dienstleistungen GmbH. In March 2023, Circle 8 entered into a seller loan agreement with Swiss Links AG and Swiss Links International Limited to partially fund the acquisition of 100% of the shares in Swiss Links AG and Swiss Links International Limited. In April 2022, Circle 8 entered into a seller loan agreement with Payment Secured BV to partially fund the acquisition of 100% of the shares in Fixed Today Holding BV. The company, upon the merger on June 18, 2024, put in escrow 4,704,098 shares at a closing price of $2.36 per share, valued at $11,101,671 as a reserve for the potential settlement amounts of legacy SIC LL stockholders. On October 24, 2024, the company entered into an amended and restated settlement agreement and general release of claims with the company's former chief executive officer. On February 3, 2026, the amendment date, the company amended its agreement with the PEO, to whom it had a specific outstanding payable of $2,207,944, the repayment amount. On October 30, 2019, Rosanna Vargas filed a complaint in the Superior Court of New Jersey at Camden County against Linier and various defendants, including Linier's client, alleging severe personal injury sustained at work. On January 6, 2021, a class action wage and hour complaint was filed in the Superior Court of California, Los Angeles County, by Enrique Briseno as class representative. On June 16, 2021, a complaint was filed in the Superior Court of New Jersey Law Division, Middlesex County. On October 8, 2021, a class action wage and hour complaint was filed in the Superior Court of California, Orange County, by Teresa Alvarez and Myrna Flores as class representatives. On August 1, 2023, a class action wage and hour PAGA complaint was filed in the Superior Court of California, County of San Bernardino, by Maria Reyes as class representative. On December 9, 2024, BAC Rhino 3 Federal LLC, Rhino, filed a complaint in Suffolk County Superior Court against Atlantic for breach of contract, seeking damages for accelerated rent, plus costs of collection and outstanding rent to date for Atlantic's default under the lease and failure to pay monies owed thereunder. On April 2nd, 2026, Atlantic and its Lanier subsidiaries, Lanier Investments, LLC, Lanier Holdings, Inc., and Lanier Staffing Solutions, LLC, collectively the Lanier subsidiaries, commenced a lawsuit in the Supreme Court of the State of New York, County of New York, Civil Index number 154264-2026 against SPP. Later on April 2nd, 2026, Rick Aerosmith, on behalf of SPP, and in response to the above-described lawsuit brought by the company, commenced a lawsuit in the Court of Chancery of the State of Delaware against the company and its officers. On March 30th, 2026, SPP notified Atlantic and the Lanier subsidiaries that certain events of default have occurred and are continuing under the amended and restated loan agreement dated as of April 29, 2025, the financing agreement. In March 2025, Circle 8 asserted a claim of approximately francs mobillion $6 million and $28.2 million as of March 31, 2026, against the sellers of Swisslinks International Limited, Swisslinks, as well as against the W&I Insurance Company and Markel International Insurance Company Limited, Markel, in connection with alleged breaches of the share purchase agreement dated February 22, 2023, the Swisslinks SPA. In July 2025, the sellers of Swisslinks initiated legal proceedings against Circle 8 Switzerland AG as buyer, as well as against Circle 8 Group BV and D Staffing Group Nederland BV as guarantors, seeking payment of amounts allegedly outstanding under the earn-out arrangement agreed as part of the Swisslinks acquisition. On March 20, 2026, the company filed with the Secretary of State of the State of Delaware a certificate of designations, preferences, rights, and limitations of Series B 5% convertible preferred stock, the certificate of designations to its amended and restated articles of incorporation. Concurrent with the filing of the certificate of designations, the company entered into a securities purchase agreement, the purchase agreement, with an institutional investor, the purchaser, whereby it agreed to sell to the purchaser, the offering, 5,600 shares of the newly established Series B preferred stock. On April 17, 2026, SLR notified Lanier Staffing Solutions, LLC, Lanier, of certain events of default as a result of a. the occurrence of events of default described in the below-described letter from SPP to Atlantic dated March 30, 2026, and b. Lanier making certain payments to or for the benefit of Atlantic. On April 21, 2026, the dividend rate increased to 18% per annum as the necessary requirements to trigger this increase were met. On April 29, 2026, the company entered into a new factoring agreement which refinanced the then outstanding balances of its October 2025 factoring agreements into a new factoring agreement, resulting in cash proceeds of $1,039,500 to the company, net of $32,944 in origination fees. On April 29, 2026, the court denied Atlantic's request for relief and set a trial date on the preliminary injunction for June 23, 2026. On April 27, 2026, the court entered a status quo order, the order. On May 4, 2026, Employers Personnel, LLC, OEP, the company's professional employer organization, PEO provider for Lanier, delivered a notice alleging that Lanier was in material default under the parties' professional employees services agreement. On May 4, 2026, the company entered into a common stock purchase warrant agreement, CS purchase warrant agreement, with EP. On May 11, 2026, EP withdrew the notice of default after the parties entered into the CS purchase warrant agreement. On May 29, 2026, the company received a notice, the notice, from the Listing Qualifications Department of the NASDAQ Stock Market LLC, NASDAQ, stating that the company is not in compliance with NASDAQ Listing Rule 5250C-1, the rule, due to the delayed filing of its quarterly report on Form 10-Q for the period ended March 31, 2026. Atlantic, through its subsidiaries, is a worldwide strategic staffing firm. Since its formation, the company has grown from a regional operation to a worldwide staffing firm with offices and geographic reach across the United States and Europe. Atlantic is headquartered in Englewood Cliffs, New Jersey, and has more than 100 locations in the USA. Circle 8 is headquartered in Amsterdam, Netherlands. Atlantic's corporate acquisition strategy is designed to assist its client companies in the transformation of stagnation into growth to achieve sustainable results through their most important asset, people. Service revenue net was $249,886,893 and $102,808,807 for the 3 months ended March 31st, 2026 and 2025, respectively, an increase of $147,078,086 or 143.1%. The Circle 8 acquisition accounted for $145,248 these million, or the increase. Cost of revenue for the 3 months ended March 31st, 2026 and 2025 was $228,460,840 and $91,622,685 respectively, an increase of $136,838,155 or 149.3%. The Circle 8 acquisition accounted for $134,938,646 of the increase. Selling, general, and administrative expenses for the 3 months ended March 31st, 2026 and 2025 were $31,997,753 and $19,399,479 respectively, an increase of $598,274 or 64.9%. The Circle 8 acquisition accounted for $8,969,658 of the increase. Depreciation and amortization expense for the 3 months ended March 31st, 2026 and 2025 was $4,332,094 and $1,236,389 respectively, an increase of $3,095,705 or 250.4%. The Circle 8 acquisition accounted for $3,103,592 of the increase. Gain on debt extinguishment during the 3 months ended March 31st, 2026 relates to the company and Saint Laurent entering into a confidential settlement agreement pursuant to which the entire $1,375,000 principal amount of the notes were paid in full on January 29th, 2026. Interest expense for the 3 months ended March 31st, 2026 and 2025 was $3,554,670 and $1,284,822 respectively. The Circle 8 acquisition accounted for $1,027,272 of the increase. Other expenses, gains, and losses for the 3 months ended March 31st, 2026 primarily relates to the loss on the preferred stock and warrant offerings and the change in fair value of the Circle 8 Benelux warrants. Income tax expense benefit for the 3 months ended March 31st, 2026 and 2025 was $73,181 and doubting $9,617 respectively. On July 4th, 2025, the One Big Beautiful Bill Act, OBBBA, was signed into law, which is considered the enactment date under U.S. GATT-DAM. The company closed on a new ABL lender credit facility on April 29, 2025, replacing its obligations under the BMO revolver with an increased borrowing capacity of up to $70 million. Lanier and IDC entered into a debt allocation agreement, the allocation agreement, dated as of December 31st, 2023, which specifies and allocates responsibility for repaying or refinancing the joint and several debts between Lanier and IDC. On April 29, 2025, the company's subsidiary, Lanier Staffing Solutions, LLC, Lanier, entered into a loan and security agreement, the loan agreement, with North Mill Capital, LLC, DBA SLR Business Credit, SLR, providing for a $70 million advanced limit senior secured revolving credit facility, the revolver. On August 31st, 2021, Linier and IDC as co-borrowers entered into a term note in the amount of $30,300,000. On August 12, 2024, the company entered into the 10th Amendment and with its lender, under which the lender waived all existing events of default as of the date of the agreement and agreed to forbear from exercising its rights and remedies with respect to such events of default under the term note through September 30, 2024. On April 28, 2025, the term note lender foreclosed on certain amounts of IDC's stock of Atlantic International Corp. As part of the purchase price consideration for the transaction, Linier and IDC as co-borrowers issued various seller notes to former owners in the aggregate principal amount of $15,750,000. During 2022, Linier and IDC as co-borrowers have issued 9 promissory notes in the aggregate principal amount of $13,494,133. On January 16, 2024, Linier and IDC as co-borrowers issued 6 notes payable with an aggregate value of $6,941,521. As part of the merger, on June 18, 2024, the company entered into a secured bridge loan credit agreement in the principal amount of $1,950,000 at an interest rate of 5% per annum. On July 22, 2024, the company entered into an amendment to extend the maturity date of the credit agreement to June 18, 2026. From April 29, 2019 to April 29, 2020, the company entered into a series of non-convertible promissory notes, the promissory notes with St. Laurent Investments LLC, St. Laurent, amounting to $1,375,000. In connection with the closing of the merger on June 18, 2024, we issued to IDC the merger note in the principal amount of $35 million that originally matured on September 30, 2024. On September 12, 2024, the company entered into Amendment No. 1 to the Convertible Promissory Note, Amendment 1 to the Merger Note, which extended the maturity date to the earlier of March 31, 2026, or the completion of at least a $40 million capital raise. On April 29, 2025, the company and IDC entered into an amended and restated convertible promissory note, which further extended the maturity date to the earlier of March 31, 2027, or the completion of at least a $40 million capital raise. On January 23, 2026, in connection with the Circle 8 acquisition, the company issued a convertible note to Axiom as a component of consideration transferred for the business. In connection with the Circle 8 acquisition, the company assumed a receivables purchase agreement between Circle 8 and Argentum Securities Ireland plc, Argentum, which permits Circle 8 to sell eligible billed and unbilled receivables to Argentum for cash proceeds in certain circumstances. In February 2023, Circle 8 entered into a loan agreement with Luzerner Cantonal Bank AG as lender for a credit facility of up to front $29 million, approximately $36,285,000 as of March 31, 2026, to partially finance the acquisition of 100% of the shares in Swisslinks AG and Swisslinks International Limited. On October 26, 2022, Circle 8 entered into a credit agreement with Beachbrook Capital, LLP, to partially fund the acquisition of all outstanding shares in the capital of Seven Stars Holding, B.V., and each of its subsidiaries. On April 26, 2023, Circle 8 entered into a loan agreement with Sparkas Colin Bonn to finance a portion of the purchase price payable under a share purchase agreement for the acquisition of 80% of the shares outstanding in Königstein Beratungsgesellschaft für EDV Dienstleistungen GmbH. In March 2023, Circle 8 entered into a seller loan agreement with Swisslinks AG and Swisslinks International Limited to partially fund the acquisition of 100% of the shares in Swisslinks AG and Swisslinks International Limited. In April 2022, Circle 8 entered into a seller loan agreement with Payment Secured BV to partially fund the acquisition of 100% of the shares in Fixed Today Holding BV. The company entered into the preferred stock financing after evaluating a range of potential capital raising alternatives in light of prevailing market conditions, the company's growth initiatives, acquisition integration activities, and the capital requirements associated with scaling its operations. Lanier entered into an agreement with Employers HR, LLC, on February 19, 2018, to process the company's payroll. LMH was a non-controlling member of the company with a 10% ownership interest at December 31, 2023. On November 15, 2022, Lanier and IDC as co-borrowers issued Year 1 earnout notes to LMH with total balances of $5,127,218. On January 16, 2024, Lanier and IDC as co-borrowers issued Year 2 earnout notes to LMH with total balances of $2,013,041. As a result of the merger, the company was required to file short-term income tax returns for the periods of January-March 2024 to June 18, 2024, and June 19, 2024 to December 31, 2024. Total amounts receivable from IDC amounted to $2,692,867 as of March 31, 2026, and is included in other assets on the accompanying condensed consolidated balance sheets. On June 18, 2024, the company entered into a $35 million merger note with IDC. On June 18, 2024, the company entered into a credit agreement with SPP in the principal amount of $1,950,000 at an interest rate of 5% per annum. The Axiom Consulting Agreement and Axiom Netherlands Consulting Agreement stipulate that Axiom and Axiom Netherlands, respectively, will provide ongoing services consisting of advisory, management, strategic, operational, and transaction support services to Circle 8.